This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with the closing grain and livestock comments for September 18th, 2015. Dees corn down 2.5 on the day, 377 1/4. November soybeans down 17 1/4, 867 1/4 on the close. October meal down 420, 309 even on the close. December Chicago wheat up 5 1/4, 486 3/4. December Minneapolis wheat up 3/4, 511 even, and December Kansas City wheat up 3, closing at 482 1/4. For the corn market this week, it was a little firmer tone. Corn kind of chopped around for a lot of the wheat after some hopes of higher trade. We kind of settled back and traded more steady on the week. As we worked ahead. A little negative close here, but corn trying to keep this bottom intact here. We're about at a 50% retracement mark here and look for more of a choppy tone, somewhat supportive as we work ahead, as we believe corn yields will begin to falter a little bit versus USDA forecast, possibly coming down as much as 1 to 2 bushel per acre, but that's going to be some ways off with the October and November reports, the likely start or continuation of that yield downtick. For right now, we are on the heat of harvest here. That'll pick up here on a weekly basis for the next 3-4 weeks, and that's going to keep somewhat of a negative tone, and that's why you're seeing the bean market particularly lose some steam here today. Yields coming in about in line with expectations. When you look at the overall tone, USDA might have to come down a little bit in yield in our opinion, but not much, indicating a lot of beans in the pipeline and just not enough demand to offset the weakness right now. And that's why you're seeing the beans take on a little more negative tone. 830 to 850 we look to be the price count as we trade lower here. Upside counts, resistance at 910, 920, and more of a choppy range, but unlike the corn where we think the bottom's in already, the beans may try to go press down and put in some new lows as we work ahead. The wheat market, on the other hand, a little firmer today. That had a lot to do with the late weakness in the dollar yesterday. Dollar recovering a little bit today, but that was enough to allow this wheat market to try and bid up here a little bit on the day. We're still not competitive in world values, and we'll have to see how that musters out in time. But as for right now, more of that choppy tone as well in the wheat market. Importance right now for producers of grain, look to be locking basis for just specific harvest needs. You get 2 weeks past harvest, and we believe those basis levels could start to improve already, but that basis gut slot could be a very nasty time for basis levels if these elevators fill up quickly. Looking at feeder cattle today, down 197.5, 185, 82.5. Live cattle down 85, 136 even on the close. And the hog market October up 47.5, 71.05 on the day. Deferred months were a bit weaker. When you look at the cattle market, we did get a cattle on feed report. Placements were about 5% lower than expectations. Everything else was in line with expectations. So that could be a little bit friendly there right off the get-go on Monday. But heavy cattle continue to plague the market and really provide that weakness. Cutout values losing over $3 in choice and about 150 to 180 in select at midday on Friday. So the negative tone in cash and cutouts continues. The hog market up towards the upper end of the range right now. With cattle breaking down, we do think that there will be a spillover effect, allowing this range trade to stay intact here for the hogs, and really kind of not a lot of news to move it otherwise. Cutout values at midday were firmer and more of a range-bound trade there as well. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Traded in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.